Good morning, this is Indar Madan working as an insurance broker in Mississauga and Brampton area. Today we are going to be talking about RESP. Question is, will you be able to afford post-secondary education for your children? Will you be able to fulfill your dreams that you have for your children? Be something, make something out of their life, be doctor, lawyer, accountant, or any higher position, business management, whatever it takes for you to be happy and for your children to have some good education program. As we all know, education cost is going higher every year. For the last 10 years, cost of education has tripled. Cost of education increases more than the inflation rate. In the coming 10 years, the estimated cost of education is going to be approximately $110,000 for any bachelor degree programs for 4 years. And it can cost more depending on the program kids go for or depending on the university they join. So what as parents you can do to fulfill your dream, to fulfill your desires, your children's future, be nice. You need money, that's for sure. And if there's no money, kids are going to be denied for the education. What can I do for you? I can set up a RESP plan where you can save money in registered education savings plan, which is registered with Revenue Canada and provides you 20% grant on your contributions. How much contribution can I make? You can make $50,000 your lifetime contribution limit with no annual limit. You can put monthly, yearly, whichever way is convenient for you. You can choose the automatic withdrawal. Money comes out of your account. You're budgeting that monthly which you want to save for your children for their future. And also, just to remind you, the investment growing inside the plan is not taxable. While contributions are not tax deductible, but money growing inside the plan is not taxable. How many years can I contribute? That's the most frequently asked question. Whatever age you have started, your contribution will be up to December 31st in the year when child turns 17. What happens when my child is ready to go to school? You certainly have the money available to you. What happens? If I missed, if I missed contributions for the last 3 years, 4 years, and my child is 9 years, and I just started plan 3 years ago, so what can I do? You have option to carry forward the missed contribution, but maximum you can carry forward only for 1 year. For example, in 2010, you make contribution of $2,500, and for the last 1 year contribution, you can bring it up to 2010, making contribution $5,000 and getting maximum grant, which is $1,000 a year. That is the grant available to you. The grant amount, how much is that you get? Lifetime grant. Lifetime grant is $7,200. It could be up to $9,200 in certain cases. That is available by the government of the Canada. After the money is in the plan, now is the time to take the money out for the plan. What can I do? How can I get my money out? When your child is ready to go to university, post-secondary education, usually the practical way, what I have been through myself, is the month of June. Usually you get the form from the RESP provider, which could be bank, trust company, or which could be insurance companies, some of them, and some of the group provider like CST, Heritage, Global, and all that, depending on where you are. They will send you the form in the month of June. You complete the form, send it over to registrar. They'll complete it and send it to RESP provider, and thereby the RESP provider will put the funds in the student's account. Contributions can be withdrawn by you tax-free. Money grown inside the plan, which is called education assistance payment, is taxable in student's hand. And as we all know, students have very little income or no income basically, so it is almost tax-free income available to students for their education. What happens if my child doesn't go through this school post-secondary education? You can transfer. You may have the option to transfer from one child to the another child. If that is not the case, you can take your principal out, which is your contributions out, tax-free. Earnings or education assistance payments will be taxed at your marginal tax rate. CESG grant has to go back, but interest earned will stay in the plan for you, which you can withdraw. As I said, it's taxable, and there will be 20% additional taxes. You have an option to take up to $50,000 transfer in your RSP account if you have room in there. These are certain options you have available. There's a lot more about this subject which you would like to know, and if you want to know details about that, send us your inquiries. You can go to my website, insurancebrokermississauga.com, and give us a call, 905-568-1676. Send us your inquiry. Once we get your inquiry, at no obligation, we'll mail you the full kit of the information which has all this black and white rules and regulation, what is required, what is not required. All that information will be available in the kit for yourself. Go through that, and if you feel comfortable, come back and we'll discuss that and see what plan suits in your personal circumstances best for you. So please do give us a call, 905-568-1676. Thank you.